Yes, now we'll move on to the next part of your input tax credit chapter, where we are focusing on section 17. As already discussed, section 17 is split into two parts. One, block credit, one, proportionate credit. One, the area where you don't get the credit. Other, the area where you get partial credit, proportionate credit. So now our focus is on section 17, subsection 5. For block credit, there are no rules. Section 17, subsection 5, where the focus happens to be on your block credit. Block credit. Now, if you look at this block credit, the first entire part, this entire page is all about your motor vehicles, vessels and aircrafts. Is everything about your motor vehicles, vessels and aircrafts. Right. If at all you see the first part, you will find about your motor vehicles, part A. Part B is about your vessels and aircrafts. This is when they are purchased. When you are purchasing motor vehicle, what happens? Can you take the credit or you cannot take the credit? The question is whether you can take the credit or credit cannot be taken. So when you are talking about motor vehicle, split that motor vehicle into two parts. Split that motor vehicle into two parts. So the same thing that is given there, I am just picturizing or breaking that into goods, passengers, rather other than goods and passengers, into three parts, not two parts. We'll divide that into three parts. With regards to motor vehicles used for transportation of goods, can you avail ITC? Answer is yes. You can avail ITC. If it is a motor vehicle which is neither used for transportation of goods or transportation of passengers, special motor vehicles, say dumpers and tippers used in construction sectors. Dumpers and tippers used in construction sector, special motor vehicles, they are neither used for transportation of goods or transportation of passengers. Can ITC be availed? Yes. See, what is the understanding? When they are used for only transportation of goods or for neither for transportation of goods or transportation of passengers, which means special purpose motor vehicle, they will be used only for business purposes. They will be used only for business purposes, therefore they give full credit. The problem comes only and only when you are talking about passenger. Right. If at all passenger motor vehicle, it is a chance that the company can use it even for personal purposes. It may be for business, it may not be for business. And the government tells that we are not here to analyze whether you are using for your business or not. You may actually use it for your business, but will not give the credit. So that you have to split that into two parts, where you are talking about your motor vehicle with a passenger capacity up to 30 and passenger capacity more than or equal to 14. Up to 13 counting the driver. Up to 13 counting the driver. If it is up to 13, 13 or less than 13, 13 or less than 13, we will not give you the credit. We will not give you the credit. If at all you are talking about a bus, it is having a capacity of more than or equal to 14, do you think that the company or the family who is owning the company will use it for their personal purposes? Analyze and think that. So when you talk about a motor vehicle with a seating capacity of 14 or more, they do understand that it cannot be used for personal purposes. Therefore they tell that, okay, now you take the credit. Now you take the credit. Are we guys clear with this understanding? Are we clear with this understanding? So that is how they split. That is how they split. So if it is for goods transportation, take full credit. Passenger transportation, ask a question. Seating capacity less than or equal to 30? No. Seating capacity more than or equal to 14? Yes. If it is for special purpose motor vehicle which is neither for goods or passengers, take full credit. But wait, Now they tell that here when you cannot take the credit, there are certain exceptions. There are certain exceptions. Quite logical exceptions. They tell that even if a motor vehicle is having a seating capacity of 13 or less, still we will give you credit. When I tell exception, the meaning of that is even in this case we will give you credit. Still we believe you and we will be giving you credit. Very normal case. What if I tell that you are a dealer of a motor vehicle? You are a dealer of a motor vehicle who is going to further supply the motor vehicle. Further supply the motor vehicle. You will purchase that car, say 5 seating capacity, you will sell it. It is your main business. Can you ask a dealer of a car not to take the credit? A dealer of car will tell that this is my main business item. How can you tell no? So for him, you can take. If a person is further supplying such motor vehicle, yes, he can take the credit. If at all I am talking about a scenario where that particular motor vehicle is for passenger transportation service. Supposing we are talking about Red Taxi or any taxi company who is owning say 100 cars. All the cars are having a seating capacity of 5. Now, can Red Taxi book the credit? Yes, because their main business asset is nothing but the cars. They will get the credit, isn't it? Or if I tell that you are talking about a driving school, don't you think that again for driving school, motor vehicle is the main asset based on which they will do their business? Give the full credit. Give the full credit. Are you guys clear with this understanding? Yes. Are we guys clear with this understanding? That is very clearly here. See, if at all you are talking about your vessels and aircrafts, everything is the same. There you will not check the passenger capacity. Otherwise, it is exactly the same. It is exactly the same. If it is for goods, yes. Passengers, generally no. But in these 3 cases, yes. In these 3 cases, yes. Other than for goods and passengers, yes. Yes. Right. So if you see your vessel and aircraft, you will find exactly the same. If I tell it is for goods, you will give the credit. Now understand that even when you talk about your vessels and aircrafts, the purpose is restricted. Either it is for goods or for transportation of passengers. Like your special purpose vehicle, generally you won't have in your vehicles and aircrafts. So they tell that for goods we'll allow it. And other cases we will not allow it. We will not allow it. But again the same 3 exception comes. If at all it is other case, but it is for further supply or transportation of passengers or giving training or navigating or flying such vessels or aircrafts. In motor vehicles you have driving schools. Here it is about navigating or flying such vessels or aircrafts. We will give you credit. So once you understand the concept of motor vehicles, you make few changes for vessels and aircrafts. One thing, make sure that here you have generally goods and only passengers, or even if it is others, it will come here. They will not give. Right? Generally, it is only goods and passengers. It is not like your vehicle where you will have special purpose also. So, goods, what they tell, take the credit. Passengers, what they tell, no credit. Do you have exceptions? Yes, the same 3 exceptions. The same three exceptions where credit will be given. Now, if I tell Mukesh Ambani is having a helicopter for making official visits. whether credit will be given. No, whether it is for official visit or whatever, it is for passenger transportation. So helicopter owned by Reliance Limited, even if it is for business purposes, no credit. Or Rajmouli purchases an airline to make sure that it can transport its crew members and other items related for shooting purposes to different location. A big production house is purchasing an airline to ensure that they are not incurring huge transportation expenses for transportation of its crew members. Again, strictly understanding, they are using it for business, but still it is covered under which category? Passenger. Aircraft for transportation of passengers. The answer is no. You cannot take the credit. Is it covered by the exceptions? No. Both in case of Reliance Limited, helicopter for managing director, or a big production house, aeroplane for transportation of crew members. In both the cases, you will feel that it is used only and only for business. But is it covered by exception? No. Is it for further supply? Further selling that particular vehicle or vessel or aircraft, or is it for renting of such vehicle, aircraft, vessel or aircraft? Further supply will include two things: further selling that vehicle or further giving that vehicle on rent. Further selling that vehicle or vessel or aircraft, or further giving that vessel or aircraft on rent. It is not for further supply. Is it passenger transportation? Is it passenger transportation sector? No. It is not running the business of passenger transportation sector. That person should be having the business of passenger transportation. Supposing if you are talking about Indigo Airlines will be covered here, because Indigo Airlines, the main purpose is transportation of passengers. But as far as your Reliance Limited is concerned, or a big production house is concerned, they are not involved in the business of transportation of passengers. No credit. Is it giving any training on navigating or flying such vessels or aircrafts? No. No credit will be available. No credit will be available. But if I tell that it is all about your Indigo Airlines, then they are covered by the second exception for transportation of passengers. If I tell that there is a big cruise purchased by a company for transporting the passengers, say from India to other part of India, say Andaman Nicobar, then yes, because they are involved in the business of transportation of passengers. Are you clear this understanding? That is all about your motor vehicles, vessels and aircrafts. Now you may wonder, if that was all that is there, then what is given below? That is also dealing with motor vehicles, vessels and aircrafts. But this time, here you are not talking about purchase of motor vehicle, you are not talking about purchase of vessels or aircrafts. You are talking about their related services. So here one thing is, what if I am hiring that motor vehicle, vessels or aircrafts? Rather than purchasing that vessel, motor vehicle, vessel or aircraft, I am hiring it. I am taking that motor vehicle, vessel or aircraft on hire. And whether I purchase or take that motor vehicle, vessel or aircraft or vehicle on vessel, aircraft or motor vehicle on hire, one thing is common. I will have some expenses. I will have general insurance expenses. I will have servicing and repair and maintenance expenses, isn't it? Now to make this pretty simple, either I will go for purchase option or go for renting or hire purchase option, isn't it? Renting or hiring option. Renting or hiring option. Right. I'll talk about the two types. One is again one vehicle where I am eligible, other vehicle where I am not eligible. So there is motor vehicle 1, vessel 1, aircraft 1. There is motor vehicle 2, vessel 2, aircraft 2. Either I will purchase it or take it on hire. Isn't it? Either or. Either or. It is not both. Right? You get your questions in your financial management, right? Which is better, to purchase or take it on hire. So it is either or. Either I will decide to purchase it or take it on hire. Now what is the difference? In the first category, I am assuming that it is a motor vehicle, aircraft or vessel which is eligible for ITC. Supposing I make it pretty clear, it is for goods transportation. It is for goods transportation. Here I will make it very clear that it is for passenger transportation. Not that company is not involved in transportation of passengers, but that motor vehicle, aircraft or vessel is used for the purpose of transportation of passengers. That company is not involved in that. So here, if I purchase, I will get the credit. Even if I take the same motor vehicle, aircraft or vessel on hire, I will get the credit. If I purchase a motor vehicle, vessel or aircraft which is used for passenger transportation and the company is not involved in passenger transportation, it's not covered by the exceptions, I will not get the credit. Whether I purchase or whether I go for hiring, I will not get the credit. Now whether I purchase or whether I go for renting or hiring, there will be certain common expenses. What are they? General insurance, servicing, repair and maintenance services. General insurance, servicing, repair and maintenance services. Whether I go for hiring or I go for purchase, these expenses will be there. What do you think should be the answer in the first case? When I can get the credit on purchase, I can get the credit on renting or hiring. I can also get the credit on general insurance, servicing or repair and maintenance. When I cannot get the credit when I purchase that vehicle or as aircraft or vessel, whether I get that in renting or hiring or whether I incur expenses of general insurance, service or repair and maintenance, I will not get the credit. I will not get the credit. That is how simple it is. Are you clear with this understanding? Are we getting clear with this understanding? All you have to ask, what would have happened if I am purchasing that vessel, aircraft or vehicle? If I would have got the credit, I may have not purchased it. I have to ask the question, what would have happened if I would have purchased that vessel, aircraft or vehicle? If I would have got the credit, then even if I am going for renting option, I will get the credit. And any expenses on it, I will get the credit. If I would have purchased it and credit was not eligible, even if I don't purchase and go for renting or hiring option, I will not get the credit. Even on the expenses on it, I will not get the credit. I will not get the credit. Are you guys clear with this understanding? Are we guys clear with this understanding? But here also there is one exception. There is one exception that you have, that in case of renting hiring, if you have purchased a motor vehicle, on which basically credit is not available. If you go for renting or hiring, credit will not be available. But there is an exception where you can take the credit because it is a statutory obligation. Because you don't do it because it is a statutory obligation. Now let me make you understand all the points, including this last point that I was trying to do with the help of examples. So examples would be making it more clear. Including that last point, as I said, there is an exception. It might be if I tell only statute of application, it will not make much sense. Let us see all the examples. You have to be very clear whether you can get the credit or not, right? Vivo Limited has purchased auto for transportation of goods. Yes or no? Yes. Loud. Yes. Whether you purchase it or whether you take it on renting, leasing or hiring, you will get credit, and the related expenses. Yes. You will get the credit. Reliance Limited has purchased a truck for transportation of goods. Yes. The answer is yes. Cash vans for transportation of cash by White Money Bank. basically cash is not passenger, correct? Correct. It is goods. But in terms of GST, it is neither goods nor services. See, normally cash is goods. Normally cash is goods. But for purpose of GST, money is neither goods nor either or. You can take the credit. If it is used for transportation of goods, you can take the credit. If it is a special purpose vehicle, you can take the credit. So answer is yes. Ambuja builders, dumpers and tippers. Now you are talking about a special purpose motor vehicle. Can you take the credit? Yes. Whether you purchase or hire or general insurance service or on it, repair and maintenance service on it, you can take the credit. Car or helicopter for official use by employees of Kingfisher Limited. It is for office use. Even then, answer is no. Even then, answer is no. But wait, here it for renting, leasing, hiring, it may be yes. It may be if it is because of a statutory obligation. And let me give a clear-cut example. Supposing you are there in the state of Delhi, right? Delhi has a history where women's safety was not so much there. It is unlike the state of Maharashtra or unlike the state of Tamil Nadu where there is a huge care that women protection is there every time. Right? Delhi was not having that particular thing. Now in Delhi, if you have a company, they will clearly tell that if at all there is a night transportation, there is a night stay by any woman employee, you have to make sure that you make transportation facility. The company has to make transportation facility. So it is a statutory obligation. If a company is in Delhi, the company has to ensure that transportation of its female employees during night is mandatory. Yes? So here we talk about something called as statutory obligation. But wait. If that company decides to purchase 10 cars, it cannot take the credit. So company has to make a wiser option. If the company decides to purchase that 10 cars, that company is not covered by exception. It is for transportation of passengers, isn't it? That company is not covered by the exception. It cannot take the credit. But if the company decides to take them on renting, leasing or hiring, it can take the credit. It can. Now this time your purchase will have a different answer. Your renting, leasing, hiring will have a different answer, but it is not in all the cases. It is only in a place where there is a statutory obligation. You are not doing out of your own wish. You are forced to do it. Now, bus for more than 13 means 14 or more. More than 13 means 14 or more. Official use of employees. Yes. Whether I purchase or hire or general insurance expenses or it is repair and maintenance services. If it is car and jeeps for trading purposes by anomaly dealers, it is involved in further supply. Can you take the credit? Yes. If I talk about Red Taxi who has purchased cabs and they are into the business of passenger transportation service, can they take the credit? Yes. If I talk about Akash Udan Limited, they have purchased aeroplanes for giving training for flying, can they take the credit? Yes. If I am talking about, now this is what we have discussed in all the cases. The last 2 points are certain special points. If I talk about Tata company and tell that Tata company is manufacturing the cars which is 5 seating capacity, please understand that Tata company will neither purchase the car nor take that car on renting or hiring, because it will have the raw materials then it will manufacture the car. Now, don't you think that Tata company, though it is manufacturing a 5-seating car, it is into the business of manufacturing of cars, and for them, general insurance and repair and maintenance service are very important. Yes or no? Should they get the credit? Yes. It may be a scenario where it is a 5-seater car. Let it be. It is manufacturing that car. So when you are talking about manufacturing, I am not touching even trucks, because trucks means you will easily, okay, you will link it to goods and all, you tell that I can take the credit. I am not even touching trucks. Focus on manufacturing of cars, and that too I tell that it is a 5-seating capacity car. 5-seating capacity car. Now understand that Tata company will never ever purchase that car, it will purchase the raw materials. Right, it will purchase the maybe rubber for tires, glasses, plastic, iron and steel. It will purchase the raw materials. Correct? So there is no question of purchase or hire. The question is only about the related services. Don't you think that it is into such business where general insurance and repair and maintenance services must? Yes or no? They'll get the credit. They'll have, say, 10,000 stock of cars. Don't you think that they'll take the credit? They'll go for insurance? If a company is having 10,000 number of cars, which is a huge number, and they don't take general insurance, then they cannot even survive. If something wrong happens, they are finished. They'll take general insurance, which is very common for their business. Take the credit. Take the credit. This is for manufacture of vehicles or vessels or trucks. For them, you can always take the credit. You will never ask about purchase or hiring. The question is only about general insurance or repair and maintenance services. If I tell that there is a general insurance company, it has taken reinsurance from another company. It has taken reinsurance from another company. See, general insurance company has outward supply of insurance service. When I tell it has taken reinsurance from another company, inward supply is also insurance service. Let us assume that insurance is on a motor vehicle 5-seating capacity. Again, let us stick to that. Motor vehicle for passengers 5-seating capacity. Basically, for this insurance company, you are not talking about, specifically when you are talking about this example, you are not talking about the purchase or renting or hiring. For an insurance company, taking reinsurance to reduce the risk is very normal. Their outward supply is insurance. Inward supply is also, let that be insurance on a passenger transportation vehicle for a seating capacity of only 5. But it is main component of their business. Should they be given the credit? Yes. They will be given that credit on general insurance. Repair and maintenance service will not come for them, but they will be given the credit on the general insurance service. We are talking about their inward supply. I repeat, supposing I am an insurance company who is insuring many cars and all of them are say 5-seating. My outward supply is insurance, and here we are talking about input tax credit, so focus should be on inward supply. I find that I have taken huge risk and I go to another insurance company. I go to another insurance company and I take reinsurance. Now my inward supply is also insurance, again for the same motor vehicles which are used for passenger transportation service, seating capacity only 5, but will I get the credit? Yes, I will get the credit. I will make the example more simple if I connect many things together. Supposing there is insurance company 1, that is Tata company, that is insurance company 1, insurance company 2, Tata company, and that is Reliance Limited. And they are talking about motor vehicle used for transportation of passengers, 5-seating capacity. It is only about less than or equal to 13 seating capacity, to make you understand the concept. Now, insurance company 1 is giving services to insurance company 2 in relation to that motor vehicle. Reinsurance. Insurance company 2 is giving insurance to motor vehicles of Tata company as well as Reliance company. And if I tell Tata company, you are talking about manufacturer of cars. And here it is into other business. It is into other business. Please tell me the answer. Inward supplies for 3 persons, isn't it? 1 insurance company. Insurance company. 2, 1 is Tata, 1 is Reliance. What will be the answer for insurance company 2? Can it take the credit? Insurance company 2 has given the services to Tata as well as Reliance. Can it take the credit? Yes. Tata company. This it is not into any other business, it is into manufacturing of cars. Can it take the credit? Yes. Reliance Limited. Reliance Limited has purchased those cars. They have purchased those. So, if I were to tell Reliance Limited, let us assume 2 things. They have purchased cars from Tata Limited and taken insurance from insurance company 2. Whether it is purchase of car from Tata Limited or whether it is insurance service from insurance company 2, they cannot take the credit. They cannot take the credit. So, in this example, we have a general category and we have the last 2 special categories that we have discussed. I have consolidated all the points, general point and the last 2 special points within the same example. Are you guys clear with this understanding? That is everything to do with your credit in relation to motor vehicles, aircrafts and vessels. Now, talking about other block credits. Other are pretty small credits. First we'll talk about the first category where the focus is on food and beverages, outdoor catering, beauty treatment, cosmetic and plastic surgery, health services, life and health insurance. Can you take the credit? General answer is no. You cannot take the credit. Be it membership of a club, health or fitness center, or travel benefits given to employees. It is not business travel. If it is business travel, you can take the credit. It is travel on vacation, that is leave travel concession or home travel concession. If it is business travel by employees, you will get the credit. Now this travel is leave travel concession or home travel concession. It is on vacation. Now you may wonder how these points are all coming. Understand that companies in India also have started to make sure that to their employees they will spend something called as staff welfare expenses. Now this is pretty common for companies in developed nations. They'll make sure that the entire vacation of an employee is sponsored by the company, or they'll make sure that even their health and fitness center. Even in India, you have companies where there will be a gym. Right? There will be a person who's giving training. Right? The company is going to make the payment to the person who's giving training. He may charge GST, but still company cannot take the credit. Now, block credit goes with the basic understanding that whether or not you tell it is for business purposes or not business purposes, we are not ready to give the credit. That is the basic understanding. Otherwise, company will extend. Only when my employees are happy and fit, they'll work more efficiently. Therefore, it has got connection with my business. Therefore, give me credit. So, this kind of understanding should not come up. You see, entire concept of section 17, subsection 5 is to ensure that tomorrow a company or a partnership firm or a proprietorship concern or an LLP should not stand up and tell that give me the credit because there is some business connection. Government tells that whether or not you prove there is business connection, we will not give you the credit. Wasn't it clearly implied when I said that production house is taking an aeroplane for only transporting the crew members and the items? It is purely for business, but still no credit. Wasn't it clearly evident when I said that Reliance Limited has purchased helicopter for the managing director only for making official visit? It is purely for business, but no, you will not be getting. They cannot check whether you are using it for that purposes or not. You will not be getting the credit. You will not be getting the. Now you may tell, if that is the scenario, why these 6 points are given separately and these 2 points are given separately. For the first 6 points, they tell that we recognize the concept of subcontracting. We recognize the concept of subcontracting. You will get the credit if your outward supply is of the same category as a part of composite or mixed supply. To make things pretty clear, let us have this example. Why they have that exception for the first 6 categories? Why they have this kind of exception for the first 6 categories? Supposing I tell that you're talking about A and company is supplying outdoor catering services to Infosys. Here we are concerned with input tax credit of Infosys. Now Infosys has given an order for catering of 1,000 people. A company has said that yes, we'll manage. Suddenly it realizes that it has never accepted such a huge contract, and they will not be in a position to manage the entire contract. So what they do? A and company subcontracts the same to B Limited. A part of the work is subcontracted to B Limited. Now B Limited becomes the supplier, A and company is the recipient. A and company now becomes the recipient. Now, as far as Infosys is concerned, Infosys cannot take the credit. Why? It is covered there. You are talking about what all categories? You are talking about food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, including life insurance and health insurance. These categories you cannot take the credit. You cannot take the credit from the angle of Infosys company. But look from the angle of A and company. A and company is providing outdoor catering services, outward supply. Its inward supply is also outdoor catering, which is very essential for its business. Whether A and company will get the credit? Yes. A and company will get the credit. A and company will get the credit. Now, there is the possibility that even Infosys will get the credit if at all there is a statutory obligation. First, normal has to understand that A and company to Infosys, B Limited to A and company. As regards Infosys is concerned, it will not get the credit, block category. But A and company will get the credit because its outward supply is outdoor catering, inward supply is also outdoor catering. It is subcontract. It is nothing but, so it will get the credit. Is there a possibility where Infosys will get the credit? Yes. If it is statutory obligation. If it is statutory obligation, it will get the credit. It will get the credit. The same is true for your, this example we have already discussed. Renting, hiring, life insurance and health insurance services. So you will find this health insurance, life insurance. This concept we have also discussed for your renting, hiring or leasing of motor vehicle. Let us again take this example. Supposing A and company is supplying hiring of motor vehicle service to Infosys. Here input tax credit is for Infosys. A and company suddenly realizes that Infosys asks for 100 cars. on hire, but it is having only 40 cars. So it is going to B Limited for balance 60 cars. Now B Limited is a supplier and A and company is the recipient. As regards Infosys company is concerned, can it take the credit? Infosys company cannot take the credit. A and company to Infosys cannot take the credit because it is life insurance or health insurance or renting, hiring of a motor vehicle which is not eligible for credit. As regards B Limited to A Limited, credit for A and company. Can A and company take the credit? Yes, because for A and company, outward supply is also hiring, inward supply is also hiring. It is nothing but subcontract. Can it take the credit? Yes, it is main item for its business. Subcontract is very common in any business. But coming back to the basics, Infosys, is there any way where Infosys will get the credit? Is there any possibility where Infosys will get the credit? Yes. If it is statutory obligation, like I said the example of Delhi state, where it was statutory obligation for the companies to provide transportation of its employees during night. If it is statutory obligation, take the credit. Take the credit. Are we clear with this understanding? So basically, you find two places where you get the credit. One, subcontract, other, statutory obligation. SS, one, subcontract, other, normally no credit. But if it is subcontract or statutory obligation, you get the credit. So, for these six categories, including renting or hiring a motor vehicle, which I have already covered, for these categories, you get the credit in two scenarios. What are the two scenarios? One, it is subcontract, same category, your outward supply is there and inward supply is there. Other, you are talking about statutory obligation. So here, for the first 6 cases, there are 2 exceptions, subcontract and statutory obligation. Now, when you talk about these 2 services, membership of a club, health or fitness center, or you are talking about vacation of employees, or you are talking about vacation of employees, company sponsoring, there cannot be subcontract. So, no need to buy at it. Their only possibility is statutory obligation. And understand that India is not so developed till now where it is having a statutory obligation for providing membership of a club or health or fitness center, which is mandatory for a company. Have you ever heard of any government across India where it has said that you have to mandatorily provide membership of a particular club, Cosmopolitan Club, or membership of a health and fitness center, a particular gym, right, Hulk Gym Center, right, or you are talking about vacation, where government has said company, you should mandatorily give vacation to employees and that too you should incur the expenses. It's not that. But yes, that is a provision. They tell that if it is because of statutory obligation, take the credit. For the first 6 cases, 2 exceptions, subcontract, statutory obligation. For these 2 cases, subcontract cannot be there. Don't try to buy out. Subcontract cannot be there. So the only exception is statutory obligation. The only exception that you find is statutory obligation. Now, you are talking about the next category where the focus is on your works contract or construction. We have discussed this long back when we have discussed your schedule 2. Both are supply of services. Construction basically is pure labor. Works contract is goods plus labor. Now let me make you understand in this way. Supposing I want to construct a particular building. either I will take works contract service, which includes goods plus service, or I will purchase goods separately and have construction service separately. Either I'll give the entire contract to a builder and tell that make this building ready, works contract, or I'll tell that you just do the construction paperwork. I'll make sure that my goods are there. My goods are there. So whether it is this category or this category, answer is the same. Concept: if you can take the credit, you can take the credit of everything. If you cannot take the credit, you cannot take the credit. Answer is the same. Now they categorize this into two parts. They categorize this into two parts. One, we are talking about your civil structure plus pipeline outside factory plus telecommunication towers. Civil structure means a normal building. Civil structure plus pipelines outside the factory plus telecommunication towers. Other, plant and machinery, which is immovable. Actually, this pipeline outside the factory and telecommunication tower, how you get it? Because when you read the definition of plant and machinery, it excludes pipelines outside the factory and telecommunication towers. It excludes pipelines outside the factory and telecommunication towers. Otherwise, people will tell that okay, telecommunication tower is nothing but a special plant and machinery, which is true. Pipeline outside the factory is nothing but a plant and machinery. Now, you may wonder why they have put in this category. We'll understand in a moment. If at all, it is the first category. If you capitalize it, if it is to P&L account. If you capitalize it to balance sheet, or if you charge it to P&L account. If you capitalize it to balance sheet, or if you charge it to profit and loss account. There's no logic. Let me tell you very clearly, there's no logic. Government is afraid that we will give huge credits. So government decided that we want to give less credit on these items because the amount of expenses on these items will be very high. And when the amount is very high, credit will also be very high. So government, supposing, I will give a very practical example. Supposing there is a Reliance Limited which is constructing a huge warehouse. Right, tens of crores. Say 25 crores it is spending on huge warehouse. A very big warehouse in the outskirts of the city. It is going to capitalize in the books of accounts. Right. So when I am talking about warehouse, it will be covered in the first category, civil structure, or the second category, plant and machinery. When I am talking about warehouse, will it be covered by civil structure or normal plant and machinery? Civil structure. It is a civil structure. The moment you capitalize it, they tell that no, we will not give the credit. Now, Reliance Limited constructing a huge warehouse is pakka, fully for business purposes. But still they are not giving the credit. What if I tell that in that warehouse there are small repair and maintenance after a year or two, where the amount will be very small. The construction took 25 crores and the small repair and maintenance is not even 5 lakhs. Now government calls, I am not taking the credit. Please take the credit. Now think of the company. Company will tell that I wanted credit when I incurred huge expenses. And that too it was pakka business related, fully business related. But government said no, that credit would have been too high. No credit. After the warehouse is ready, there are small repair and maintenance which you don't capitalize it, which you are putting in your P&L account. By the way, when you're talking about capitalization, please understand that it is not only first time construction. It is not only first original construction, it also includes your repairs, renovation, addition or alteration if at all they are major. major repairs, major renovation, major alterations, major additions, that also will be capitalized. That also will be capitalized. So now if you understand this, government is showing very different color now. Government is telling that when the amount is huge, credit will be huge, we don't give it. When the amount is small, see what will be covered here if you understand this. It will cover only normal repair and maintenance, isn't it? Because when I tell that your repairs, renovation, additions, alterations are major, even that will be capitalized. Even that will be capitalized. So normal repair and maintenance you will get the credit. Other than that you will not get the credit. Now think of telecommunication companies, Airtel, Jio, now it is VI, right? These companies have their huge expenses in telecommunication towers. Telecommunication towers is covered in first category or second category? Telecommunication towers covered in first category. First category. Government tells that no. It will have huge amount. We will not give you the credit. But after the telecommunication tower is ready, small repair and maintenance, take the credit. Now can anyone tell me under what assumption you think that telecommunication tower can be for non-business purposes? Whether Mukesh Ambani will construct a telecommunication tower for his private calls? But still government does that, no, we are not interested to give the credit. Let me take another industry which is facing problem because of this. Pipelines outside the factory. Right, all the companies which are dealing with petroleum products or oil, right, they'll have pipelines out the factory. From their factory to the customer place, there will be pipelines. There will be pipelines. Pakka it is for business purposes. Are they going to transfer any personal goods there? Pakka it is for business purposes. But they tell that no. This pipeline will have huge expenses. Say for example, Reliance Petrochemicals Limited. Reliance Petrochemical Limited. Obviously they'll have pipelines, construction of pipelines, underground pipelines. Obviously it is for business purposes. But government tells it is capitalized. I am not ready to give you the credit. Obviously there will be some small repair and maintenance every now and then going there. For that repair and maintenance which is charged to P&L account, take the credit. So this civil structure is for all industries. It is impacting all the industries. This is impacting only special industries. Pipeline outside the factory and telecommunication towers will not impact all of them, will impact only these special companies. But the civil structure is impacting all the companies. Let me give another example. That is a hotel. So when you are talking about a hotel, supposing the person is owning the land, he is constructing a hotel. Don't you think that it is pakka for business purposes? Can he take the credit? No. Civil structure. Capitalized. No credit. After the hotel is ready, small repair and maintenance, charge to P&L account, take the credit. Take the I think now points are clear. I spent a lot of time here just to tell that don't try to have business connection now. Obviously all the examples that I have taken were clearly there are business connection, but still as it was a civil structure or pipelines outside the factory or telecommunication towers where you have capitalized it, not only at the time of first time construction but also if it is major repairs, major renovation, major additions or major alterations, even then you will capitalize it. You will not get the credit. For small repair and maintenance where you take it to P&L account, you will get the credit. Now what will be the answer for your plant and machinery which are immovable? For plant and machinery, they tell that whether it is capitalized or whether they are put to P&L account, you can get the credit. But when it is capitalized, they put an extra condition, it should be having connection with outward supply also. Business connection is always required, it should be having connection with outward supply also. See, for plant and machinery, government cannot tell like that. Otherwise, all the industries will go on strike. Plant and machinery is very essential for any company. So, for plant and machine, they tell that okay, you take the credit. You take the credit. Whether it is capitalized or it is put to P&L account. Whether it is capitalized or it is put to P&L account. Take care that plant and machinery which is immovable is also having connection with your outward supply. Some kind of connection with your related to your supply of outward supply. connection with your outward supply. Now the last question to complete it, whether plant and machinery are always immovable. No, there can be plant and machinery which are, when they are movable, whether it is capitalized or put to P&L account, always you can take the credit. In this entire discussion, focus was only on immovable. The first part was also immovable properties, the second part is also immovable property. So if at all it is a normal plant and machinery, see, even in this classroom, the table, benches, the projector, screen is nothing but plant and machinery which is movable. So if it is movable plant and machinery, don't worry. If it is movable plant and machinery, it is not at all coming here. You can take the credit. You can take the credit. Only if it is immovable, you will have something called as works contract service. You will have something called as works contract service. If it is immovable plant and machinery, even then you can take the credit. That's a very small difference. Movable plant and machinery, you need not check for anything extra, whether it is capitalized to balance sheet or charged to P&L account, take the credit. Immovable plant and machinery, even there, whether it is capitalized to balance sheet or charged to profit and loss account, take the credit. But when it is capitalized to balance sheet, make sure that it is having connection with outward supply before taking the credit. Are we guys clear with this understanding? Are we guys clear with this understanding? Here also, for all these points where I have said that you cannot take the credit, only this is the place where you cannot take the credit. If it is subcontract, you can take the credit. If it is subcontract, obviously you can take the credit. So, if at all you are talking about a scenario where A and company is supplying construction services to Infosys, can Infosys take the input tax credit? A and company is supplying construction services or works contract services to Infosys for its factory, for its factory or telecommunication tower or pipelines outside the factory. That is first category. Civil structure or telecommunication towers or pipelines outside the factory. Can it take the credit? No. Can it take the credit? No. Now, A and company is not able to take that project because it is a very big project. So it goes and subcontracts that to B and Limited, which means out of say 100 floors, 40 floors will be done by A and company, balance 60 will be done by B Limited. Now A and company is having outward supply of construction of works contract, inward supply is also of construction works contract. Can A and company take the credit? Yes. A and company can take the credit. Now understand that Infosys also can take the credit in a special scenario. When it is taken to balance sheet, it cannot take the credit. But when it is taken to P&L account, when it is taken to P&L account, it can take the credit. It can take the credit. If I change this example and I tell that the question is not about your civil structure or it is not about your telecommunication towers or pipelines outside the factory, then A and company is installing the plant and machinery for Infosys. ITC is for Infosys. A and company is not able to do the entire installation of a big plant and machinery, so it is subcontracting to B Limited. ITC is for A and company. Understand, in case of subcontract, wherever it is, you can always take the credit because subcontract is very common for any business. Now coming to Infosys. Now understand that this time it is not for civil structure, not for pipeline outside the factory, not for telecommunication tower. Whether it is capitalized or whether it is taken to P&L account, it can take the credit. But when it is capitalized, it has to make sure that it is also used for making outward supplies. And if I tell that the machinery is movable, I need not check anything. I just have to check that it is having business purpose, business connection. Right. That is everything about your works contract and construction category. There are actually three categories here. Either it is works contract or goods plus construction. I may purchase iron and steel and tell the builder only to go for construction. All these categories we have seen. So this entire thing what we have discussed, including the definitions we have incorporated in those points. Now last small categories, very basic, very basic and basic category. If I tell the supplier is paying composition tax, can I take the credit? The supplier is paying composition tax, he will be giving me bill of supply, I cannot take it. It is actually repetition. This was actually not required here. I cannot take the credit because he will be giving me bill of supply. If I tell the goods and services are used for personal consumption, again this also was not required here because it is not having any business connection. I cannot take the credit. If I tell that you are an NRTP, basically NRTP cannot take any credit except IGST paid on import of goods. Except IGST paid on import of goods. IGST paid on import of goods. The last category, goods lost, stolen, destroyed, written off or disposed by way of gifts or free samples. By way of gifts or free samples, you are not paying output tax, you cannot take the credit. And even this point which is given below, you have covered earlier itself. If I tell that your supplier is of fraud category, if I tell that your supplier is of fraud category, now fraud definition is section 74, 129, 130. You cannot take the credit. If your supplier is paying some tax because of fraud and then he is giving you the invoice, can you take the credit? No. This also we have discussed in the basic condition. If you see, this composition, this personal consumption and fraud category is a repetition. If you are under composition, if your supply is under composition scheme, he will never give you tax invoice, he will give you only bill of supply. So no question of any credit. If the goods or services are used for personal purposes, you cannot take the credit. If your supplier is paid tax because of fraud, then he is trying to pass on the burden to you. You cannot take the credit. So these 3 points are already covered. Now we get to know that there is a definition of fraud. Section 74, 129, 130. That clarity we have. And the other 2 extra points are, if you are NRTP, you cannot get any credit. You cannot get any credit except IGST on import of goods. IGST portion of customs duty. IGST portion of customs duty. And if you are talking about lost, stolen, etc., where you are not paying output tax, you cannot get the credit. Now let us just see for all these points, let's see few examples and close it up. First, one of the point was all about your goods lost or stolen or destroyed or disposed or written off by way of gifts or free samples. Let us understand this. A dealer purchased 100 laptops and he claims ITC on all the 100 laptops. He claims ITC on all the 100 laptops. Suddenly he sees that 2 laptops are used by dealer's family. Can he retain the credit? He cannot retain. When I tell he cannot retain the credit, it means he has to reverse the credit. 3 laptops are lost or stolen. He has already taken the credit. Can he retain the credit? Can he retain the credit? He has to reverse the credit. 4 laptops are destroyed. Can he retain the credit? He has already taken the credit. He has to reverse the credit. 5 laptops are written off in books of accounts. They are there. See, that's the difference. Lost, used for personal purposes. That is a laptop with you, but your family members are using it. Lost or stolen, someone has taken it away. Destroyed, it is there in front of you, but it is fully destroyed. Written off, it is there in front of you, but it is outdated, obsolete. Outdated or obsolete. You are writing it off in your books of accounts. Can you retain the credit? No. You have to reverse it. But please understand that if at all you write it back, you can re-avail the credit. While writing it off, you have to reverse the credit. If you write it back, you can re-avail the credit. Now this point, back to the basics. I need not even tell anything, back to the basics of gifts or free samples. If I want to retain, I have already taken the credit. If I want to retain the credit, I have to pay output tax. I have to pay. So in case I decide to retain the credit, I need to pay output tax, deemed supply. In case I decide to reverse the credit, it is not deemed supply, therefore there is no requirement of. So if I reverse the credit, there is no need to pay output tax. For gifts and free samples, I think we have discussed long back. I have already taken the credit. Now if I reverse it, credit is 0. I need not pay output tax because it is not deemed supply as per para 1 of schedule 1. But if I want to keep the credit, then it is deemed supply as per para 1 of schedule 1. Permanent transfer or disposal of business assets on which ITC is available. So if you have your input, pay output tax, deemed supply. If you don't have the credit, or you took it and reversed it, you don't have the credit, no need to pay output tax because it is not deemed supply. What if this is just a revision, what if I tell that your company is incurring traveling expenses of employees when they are on vacation? Credit, yes or no? But if I tell it is because of statutory obligation, if I tell it was a business visit, if I tell it was a business trip, yes, only vacation is a problem. Only vacation. Go back and see the provision. Only vacation was a problem. A company will have a lot of traveling expenses for their employees. Can they take the credit? Yes. Can they take the credit? Yes. If I tell that supplier is paying tax because of fraud, what is the definition of fraud now? Section 74, section 129, section 130. Your supplier is paying tax because of fraud. Can you take the credit? But if the supplier is not paying tax because of fraud, he is paying differential tax, but it is a bona fide case, section 73. Can you take the credit? Fraud definition is section 74, section 129, section 130 here. If I tell that your company has taken membership of Cosmo Club for employees, can it take the credit? General answer is no. But if there is a statutory obligation, if I tell that your company has taken membership for you in Health Fitness Center, can the company take the credit? But if it is statutory obligation, yes. If it is statutory obligation, yes. Now the next 4 example, that is example 6, 7, 8, 9. You have the answers. Just apply your mind, think and answer. We are done with the entire concept of your block credit. You are a regular taxable person. You are a casual taxable person. You are a composition taxable person. You are NRTP. Now, to make it more interesting, you have 4 different types of purchases. You have 4 different types of purchases from regular taxable person, casual taxable person, composition taxable person, NRTP. Now, These are all 4 different examples. What if I tell that you are a regular taxable person? What will be your answer? You are purchasing from regular taxable person. Can you take the credit? You are purchasing from cash and taxable person. Can you take the credit? Yes. You are purchasing from composition taxable person. No. You are purchasing from NRTP. You are purchasing from NRTP. Yes. For NRTP there is a problem. You purchasing from NRTP there is no problem for you. You purchasing from NRTP there is no problem for you. You are a casual taxable person. You are purchasing from a regular taxable person. Yes or no? You are purchasing from casual taxable person. You are purchasing from composition taxable person. You are purchasing from NRTP. Yes. For NRTP, they have a problem with taking the credit. But you can purchase from NRTP, you will get the credit. You are a composition taxable person. Moment I tell you are a composition taxable person. The moment I tell you are NRTP, but that's one small difference. I am now bringing the 5th purchase for each of them, which is nothing but import of goods outside India. Import of goods will have customs duty. BCD, SWS, no one can take the credit. But IGST portion of customs duty, regular taxable person can take the credit. Casual taxable person can take the credit. Composition cannot take the credit. Composition taxable person also can purchase from outside India. Interstate outward supply is not allowed. Interstate inward supply is allowed. NRTP. Right. You purchasing from NRTP is not discussed here. NRTP will not have credit. If you see the summary, if I want to summarize it, your answer is same for RTP and CTP. They will get all the credit other than purchase from composition taxable person. Correct? Other than purchase from composition taxable person. Your composition taxable person will not get any credit. Your NRTP also will not get any credit except IGST on customs duty. IGST portion of customs duty. IGST portion of customs duty. Are you clear with this understanding? Your regular taxable person and casual taxable person will get all the credit except purchase from your composition taxable person. Your composition taxable person will not get any credit. Nothing. Your composition taxable person will not get any credit whatsoever. And your NRTP also will not get any credit. The only exception here is IGST portion of customs duty on import of goods. So that is everything about your blocked credit.